Welcome, dear traders. You are watching a recap of the Asian session on July 18. Despite positive signals on a Monday, Asian stock indexes declined in the morning. Risk appetite declined due to the China's weak data and expectations of comments from the top central banks. After the release of DOWNBEAT data from China, it's difficult for investors to remain positive. Besides, they are also worried about negative forecasts from several large banks. China is recovering very slowly. The authorities have not adopted additional stimulus measures yet, while markets are expecting them. A sluggish recovery of the world's second-largest economy could have an impact not only on the Asia-Pacific region, but also on other economies. This statement was made by the U.S. Treasury Secretary Janet Yellen in her speech at the G20 summit in India. She said that China's economic slowdown risks causing ripple effects across the global economy. While China is trying to bolster its economic expansion, the United States seems to have a greater chance of avoiding a recession. At least Janet Yellen sees no signs of a downturn in the country, and this is good news for stocks. Meanwhile, forex traders are more interested in the Fed's fight against inflation. They are waiting with bated breath for retail sales and industrial production reports today. These figures will give a clear picture of inflationary pressure and the Fed's plans for monetary policy. Next week, the Fed, the ECB and the Bank of Japan will announce their rate decisions. Analysts believe there is a discrepancy in the monetary policies of the Fed and the ECB. While the Fed is projected to switch to a dovish stance, the ECB intends to remain hawkish. As a result, the euro is rising, pushing the US dollar index down. After the biggest weekly drop since April 2022, the US dollar is trading near a one-year low. In the Asian session, it was still below the resistance level of 100 points, hovering at 99 and 80. In the morning, the US dollar was moving in the bearish channel of 99.5 and 99.9. However, volatility may increase later. Today is a very busy day for US markets. Retail sales, industrial production and housing market reports may significantly influence the trajectory of the US dollar. After better-than-expected US inflation report last week, the US currency could face stronger bearish pressure. The yen slowly but surely continues to climb higher. In the morning, it dropped to the level of 138.20. Trading activity is sluggish today, which means low volatility. Nevertheless, in Asian trading, the yen-dollar pair was moving in the downward range of 138 and 138.90. At the same time, investors choose the yen as a safe haven asset ahead of the central bank's meetings. However, shares of Japanese companies are more attractive for foreign investors, not the Japanese currency, wherever the Bank of Japan still intends to stick to the ultra-loose stance, which is a downside factor for the yen. Commodity currencies resumed a downward movement due to market cautiousness. These currencies are deemed as a liquid proxies of the yuan. They also went into negative territory due to the fall of the yuan caused by the weak macro stats. The Australian dollar retreated after the publication of the Reserve Bank of Australia minutes for July. They showed that the regulator considered two solutions but decided to keep the key rate unchanged. Australian Treasurer Jim Chalmers also gave a speech today. He noted that inflation is slowing down but still causes serious concern. The Australian currency reacted to his speech with the rise in the range of 0.6805 and 0.6839. However, the Aussie mainly depends on external factors, especially the movements of the US stock indexes. In the morning, investors were sitting on the sidelines before the Aussie decreased to 2.6810 due to bearish sentiment. And the New Zealand dollar faced a double whammy today. Apart from discouraging reports from China, New Zealand's services PMI index also turned out to be weak. Fresh data showed a drop in employment and in new orders. Tomorrow, the second quarter inflation report will be published. Consumer prices in the first quarter totaled 6.7%, as inflation is likely to be higher than the central bank's target range of from 1 to 3%. The kiwi is trying to maintain its upside potential. However, in the morning, the kiwi was unable to do so. The bears pushed the kiwi to 0.6294 at the end of the Asian session. The kiwi dollar pair was trading in the downward range of 0.6294 and 0.6346. It's likely to stay in this price carried today. Therefore, futures for the United States as well as Asian shares dropped in the morning. Only Japanese stocks managed to climb. On a Tuesday, trading started with a rather mixed sentiment. That's all for now. Hit the subscribe button and keep close tabs on the market developments. And see you soon!